Welcome to The Explainer. I'm absolutely thrilled you're joining me today because honestly, we are mapping out what might just be the most consequential technological transition of our lifetime. We're taking the global quantum computing ecosystem entirely out of the realm of theoretical physics, and we're looking at it for what it truly is right now, a massive, multi-billion-dollar commercial battleground. Whether you're a focused learner tracking the latest tech trends or you're just fascinated by how the global economy shifts around new paradigms, we're going to break down exactly how this landscape is growing, who's funding it, and what the real stakes are. So, let's get into it. $72 billion. Let that number sink in for a second. That is the projected market size of the quantum computing industry by the year 2035. This isn't science fiction anymore, folks. It's a rapidly commercializing technology pulling in absolutely unprecedented levels of capital. We're no longer sitting around asking if quantum will work, but rather who is going to scale it first and capture all that massive economic value. To help us wrap our heads around this complex ecosystem, here's our roadmap for today's explainer. We'll hit the quantum gold rush, pure plays versus tech titans, the global funding race, ETFs and market vehicles, and finally, hype, risks, and reality. All right, diving right into section 1, the quantum gold rush. Okay, so fault-tolerant quantum computers are still technically in development, right? But here's the thing. We're already seeing early commercial victories that generate real tangible value. For instance, there was a joint quantum trading experiment between IBM and HSBC, and it delivered a stunning 34% improvement in bond pricing predictions. 34%. The financial sector is jumping in early because it constantly deals with computationally brutal problems. We're talking advanced portfolio optimization and using quantum machine learning for credit rating and fraud detection. These early use cases are exactly why the capital is flowing so fast. Moving right along to Section 2, Pure Plays versus Tech Titans. The investment landscape here is basically split into two distinct camps. On one side, you had the pure plays, the IRT group, IonQ, Rigetti, Inflection, and D-Wave. These are hyper-specialized companies staking their entire existence exclusively on building quantum systems. Literally, if quantum fails, they fail. On the flip side, we have the aiming tech titans, Amazon, IBM, Microsoft, Intel, NVIDIA, and Google. These massive established giants are aiming their vast resources at dominating the quantum future, sure, but they also have their massive classical computing empires to fall back on if things go sideways. Now, because those pure play companies have their entire valuation tied directly to quantum progress, it's a bit of a roller coaster. Their stock prices violently boom and bust based on technical milestones, a new partnership announcement, or even just shifts in market sentiment. We've seen these massive valuation surges followed immediately by really sharp corrections. It completely highlights the intense uncertainty and the extreme high-risk, high-reward nature of pure-play quantum development. But hey, building these systems isn't just about the code and processors. It relies on a highly complex physical supply chain crossing borders all over the world. Think of this as the picks and shovels of the gold rush. For example, IBM relies heavily on a company in Finland called Bluefors. They supply these crazy, specialized cryogen-free dilution refrigerators to keep superconducting qubits cold, and we are talking temperatures significantly colder than deep space. Meanwhile, NVIDIA is out there supplying the CUDA-Q hybrid platform for researchers, and underpinning all of it, the whole industry desperately depends on critical raw materials like rare earths and molybdenum flowing through highly concentrated intercontinental trade routes. Let's zoom out a bit for Section 3, the global funding race. Recently, the U.S. government announced a massive $2 billion funding package under the CHIPS Act. But here is the kicker, the truly extraordinary part. The government is actually taking minority equity stakes in 9 strategically important quantum companies. This is a monumental shift. Governments aren't treating quantum computing as just some distant research project anymore. It is now a critical, core pillar of industrial policy and national security. The race is officially geopolitical. And this geopolitical race has created a huge disparity in how different parts of the world actually fund this stuff. The U.S. approach leans super heavily on a dynamic venture capital environment and corporate funding, really pushing collaboration between companies and universities. By contrast, the EU and China depend much more heavily on public funds. Over in Europe, their strong fundamental research base is largely supported by government programs. Though, to be fair, we are starting to see that shift a bit as regional pure-play venture funds enter the arena.
But overall, the funding surge is undeniable. Venture funding for quantum computing hit absolute record levels globally in 2025. I know generative AI gets all the flashy headlines right now, but the growth rate for quantum funding is staggering. The EU alone saw a five-fold increase in capital raised compared to their previous three-year average. A huge highlight there was Finland's IQM, raising over $320 million to become Europe's very first quantum computing unicorn. All right, moving into section 4, ETFs and market vehicles. So how is Wall Street actually packaging this geopolitical tech race for public investors? Well, they've created some very distinct strategies. On one hand, you have QTUM. That's an inclusive index-based ETF that tracks both the pure plays and the tech titans. It gives you broad ecosystem exposure, and it saw an impressive 86% return over 12 months. On the other hand, you have SBRX. They use a concentrated, highly active management strategy. Interestingly, the managers at SBRX deliberately excluded D-Wave from their portfolio. They made a high-conviction bet that mainstream gate-based computing, the kind IBM and Google are building, will ultimately beat out D-Wave's quantum annealing approach. It's a riskier, different path, but it still yielded a massive 82% return. If you peek under the hood at how broad funds like the Defiance Quantum ETF actually operate, you see they screen global stocks based strictly on primary business activities listed in regulatory filings. They are hunting for companies doing the real work, developing quantum algorithms, manufacturing quantum components, or providing the advanced machine learning hardware that makes hybrid computing possible. They're intentionally casting a very wide net across that entire supply chain. Which brings us to our final section, hype, risks, and reality. Because look, despite the billions flowing in, we have to talk about the very real specter looming over the industry, a quantum winter. Pure-play companies are burning through cash at alarming rates while operating at massive losses. And driving that financial risk is a brutal fundamental physics hurdle known as quantum decoherence. The current hardware is highly, highly sensitive to noise. Even tiny environmental factors cause a gradual loss of quantum information, which leads to errors. So until the industry achieves fault-tolerant systems with stable logical qubits, practical, large-scale commercialization is completely bottlenecked. But if and when they do break through that bottleneck, we're suddenly looking at an unprecedented cybersecurity nightmare. Enter Shor's algorithm. A sufficiently powerful quantum computer could use this algorithm to factor large numbers exponentially faster than our current classical computers. What does that mean for us? It means the RSA and ECC encryption protocols, the exact things that secure our global financial transactions, our digital signatures, our private messages, could be completely compromised. This systemic threat is exactly why governments are scrambling right now, pouring billions into transitioning to quantum-resistant encryption before it's too late. So I want to leave you with this to chew on. Will quantum computing revolutionize our financial models before it breaks the very cryptography that keeps them secure? We are literally watching a double-edged sword being forged in real time. It's a trillion-dollar race combining mind-bending physics, massive geopolitical funding, and extreme market volatility. Thank you so much for joining me on this explainer. Keep your eyes on the data and keep learning.